In today's video, I'll be walking you through a tax expert's payday routine and showing you how to pay yourself like the rich. As a registered CPA and owner of a tax technology company, Tax Helm, I've seen how important it is to have the proper payday routine when it comes to taxes. And that's exactly why I'm making this video today, to show you the best payday routine for your tax plan. All right, let's dive into it. So what I want to do on today's video is to walk you through the exact conversation that I had with a client the other day. These are conversations that I have on a weekly, if not daily basis with small business owners, just planning and organizing based on their situation. How do we make payday the most tax efficient as possible? So let's start off with number one. Let's talk about this specific client's situation. They were a successful electrician and they've been within Tax Helm for a while. And I've seen them start their business, grow their business, and revisiting this conversation about, what should we look at for 2025? How do we pre-plan and how do we make sure that 2025 is again the year that we're continuing to lower that tax liability? And this specific client had revenues of around $800,000 with an expected annual profit of around $125,000. So when I sat down with this client, knowing kind of those basic background information, I said there's some key questions that we need to ask. And those questions are going to help us determine what type of planning we need to put into place and how do we make the most tax efficient payday for them. So the first question was, what is your entity structure? This is really important because what your entity structure is determines how we properly pay you. I have in my small business tax savings handbook, I have a breakdown of if you're an S corporation, what are the ways that you can even pay yourself? If you're a partnership, how do you pay yourself? If you're a sole proprietorship, what are those options? So understanding an entity structure is important to understand because that's going to determine, first of all, what vehicles do we even have to pay you as a business owner? The next question that I walked through with this client is, how many hours are you spending in the business? And what are those hours being spent on? This gives us an idea of how much time are they being spent. It opens up the door for a whole lot of other planning. But we want to kind of know, how much time do you actually spend in the business, working on your business? How much is spent doing the actual work, being an electrician, if anything? How much is spent on marketing activities, promoting your business? And how much time do you spend on administrative type work, management, working on your team and everything else in there? And this helps us determine, okay, when we're looking at a correct pay structure, what is that going to look like? And it also helps open up the door. I've had a lot of conversations with small business owners. They're spending way too much time inside of their business instead of on their business. So this opens up the door to help open up that aspect to say, is there some different things we can move around? Can we delegate some things so you can be more efficient as you're looking to grow here in 2025? So that's the second question. How many hours are you spending in your business? And what are those hours being spent on? This truly can be an eye-opener for business owners when they start to think about, where is my time being spent? Because that can be an eye-opener and also a wake-up call for different things that they can adjust here going into the new year. The third question I ask is, what do you have in retirement currently? And what priority do you have for retirement? And this is an important question to ask because it helps us understand, okay, from a financial aspect, a financial footing, a retirement aspect, where are they at right now? Do they need some work or do they have a really good head start? Because that's going to change some of the planning we do. If they have a great progress, they're doing great there, maybe we start to shift their focus in where they're investing and things that they're doing with their profit. Maybe we shift that focus to somewhere else. We need to kind of understand, where are they at in this situation and what priority do they have on retirement? If they have a wealthy family and they say, I don't really need retirement because I'm going to be inheriting a retirement. Well, that's one concept, one thing to think about, but we want to organize that and put that together in a cohesive plan to make sure that we're being as most tax efficient with our business profits as possible. And then the next question that I asked the specific client is, what's your monthly cash flow needs to support your lifestyle? How much does it cost on a monthly basis to pay your mortgage, pay your car bills, put your kids into school? What are you spending, food, everything? Let's get a budget down and understand, what are your cash flow needs? Because this is the bare minimum. We need to make sure that you're surviving. Now, we also might say, what is your bare minimum to survive? The mortgage, your car bill, and not just survive, but to survive, without too much change. And then maybe we do, what is the bare minimum for your lifestyle? Maybe you like to go on 4 or 5 vacations a year. Okay, well, we know that that's not necessarily a necessity. It's good for you, but let's say, what is your bare minimum to maintain a similar lifestyle to what you have? And then what is kind of the ideal range to go on those 4 to 5 vacations or whatever it might be for your situation. So that helps us understand, okay, what type of cash flow do we need from this business, and how do we direct the funds to be, again, the most tax efficient? And then finally, the question that I asked about them is, have they completed the implementation of the tax strategies that we discussed in our last meeting from TaxHelm? Within TaxHelm, we're sending them to all these different strategies that they can implement and how to implement them, and we're assisting them with that implementation. And so I just wanted an update on that. Where are you at on that? Because that's, again, going to say, okay, where do we need to focus our attention on? If we've implemented, 5 out of 20 strategies and we're at a profit of $125,000, that means that we have some work to do still with other strategies, and maybe that profit's lowering. So asking these questions gives us insight into how do we plan around that? How do we organize our tax plan around that? So when we talk about optimizing that payday, how do we pay the wealthy in the most tax efficient way? The entity structure matters. This specific client was an S corporation. So for an S corporation, we needed to have a reasonable salary that's required by the IRS for S corp owners. Then we needed to figure out, okay, how much are we going to take in distributions? These are not subject to self-employment taxes. And how much are we going to utilize in various other investments that could potentially be a business deduction, maybe not, could potentially offset our income in different areas? We wanted to annualize that, and the entity structure mattered. In this case, they were an S corporation, understanding that was important. This specific client had little in retirement from their previous W-2 job. So they had a previous W-2 job. We're starting to do some retirement. As they've been growing and went out on their own and growing their business, they really haven't been putting much into retirement. It hasn't been a focus of theirs as growing their business has been. So we talked about the tax benefits from starting to fund that retirement account again, and how can we do that tax efficiently, but also be the most tax effective for long-term growth, and how can we really set them up for success that way? We talked about their monthly cash flow needs and how we were able to move some of that spending, some of those cash flow spending that they were doing on a personal side into the business. How can we move some spending that we're already doing into business deductions? And so that was a key point on that, because that is a way we can lower our profit, and that's going to help us determine, what is the right split. Again, the more money that we pay in taxes, the less money we have for cash flow, the less money that we have to build our business. So if we can be tax efficient in what we're doing, that means we're paying less taxes. That means we're having more money in cash flow for take-home pay. That means we have more money to grow our business and do what we want to do from that aspect. And finally, when we were talking about kind of building this perfect structure, we talked about profit, profit versus distributions versus payroll versus expenses in the business, and how that all creates this cohesive plan for them as a business owner. Profit is going to be what we pay taxes on. They're a pass-through entity. They were an S corporation. So whatever the profit of their business is, they're going to pay self-employment taxes on that. We talked about payroll. Payroll, they have to. They're required. As an S corp, they're required as owners to take a reasonable salary. They're going to have to pay self-employment taxes. Not necessarily called that, but essentially it's the same thing. They're going to have to pay self-employment taxes on that payroll. So how do we optimize that payroll to make sure we're doing the least amount as legally possible to keep the IRS happy, but also making sure that we optimize the tax benefits of it as well? And then we talked about the expenses. How do we take this concept of maximizing deductions and get expenses of spending that we're going to do anyways into the business to help reduce that profit number, help reduce that amount that we pay in taxes? So now that you understand how you can optimize your payday routine, I don't want you to leave this video and fall into what I like to call the generalized content trap, where you only follow advice from general videos. At the end of the day, personalized advice that's tailored to your situation is crucial for optimizing your tax plan. So for you, right now, I want to offer you a complimentary demo at TaxHelm, where we'll look at your exact situation and help you come up with a game plan for your taxes. To get that free demo at TaxHelm, click the link below in the show notes, and we can talk about it there. Now back to the video. All right, so let's talk about the results. Based on this conversation that I had with this client, what were the results? The original profit they had, $125,000 that I mentioned. And we talked about this concept of maximizing deductions. The concept of maximizing deductions is not what you typically hear when you think about that. You typically are thinking, oh, my accountant said, go buy a piece of equipment that I don't really need. Go buy a new vehicle that I don't really need. But all that's going to reduce my profit and reduce my taxes. Sure, that's great. And those are great recommendations if you need those items. But never would I recommend someone to just go out and buy something simply for a tax deduction. We want to make sure that it makes sense. And we first want to look at, how do we take spending that you're already doing, spending that you're going to do no matter what, and how do we turn that into a business deduction? Think of things like the home office deduction. Think of things like hiring your kids. Think of things like meals and travel and all these other items. How do we find business purpose to allow the spending that we're going to do no matter what? And that is the way that we look at maximizing deductions here at TaxHelp, here on our podcast and our YouTube. That's our efficient way of maximizing deductions, not just going out and buying things that you don't actually need. Of course, if we want to buy a new piece of equipment and it's going to help us grow our business or maybe go into a new line of work, let's do that. And let's see the tax advantages from it. But don't buy that piece of equipment if we don't need it. So we talked about them with maximizing deductions, accountable plans, home office, hiring their kids, all these different things. And this generated significantly more deductions that helps reduce their profit from that $125,000 and thus reduce taxes. The next thing that we did with them is we did a salary analysis based on the amount of hours that they worked. So again, we analyzed how many hours are you spending doing actual electrician type work? How many hours were they spent doing administrative work? And how many hours were they spent doing promotion for their business and advertising type work for their business? And we want to do a salary analysis to make sure that they were paying the lowest salary as legally possible while still keeping the IRS happy, because that's the very key thing. You know, with an S corporation, you're required to take a reasonable salary and you pay self-employment taxes on that salary. But any amount of money that we take out over and above that salary, we avoid self-employment taxes on. So in a perfect world, we would have that reasonable salary be $1,000 and the rest we take as distributions. We pay self-employment tax on $1,000 and just pay our normal income tax rate on the rest. That would be the perfect world. But we can't do that because that's not reasonable. $1,000 is not a reasonable salary. So we want to do an in-depth analysis and look at what are they doing in their business and what is a reasonable salary for that type of work. So we determined for them that a reasonable salary was $45,000 and the remaining amount they were going to take in distributions. Again, this provided significant self-employment tax savings because instead of paying self-employment tax on 100% of that income, we only paid it on the amount that we took as a reasonable salary that we had backup proof. We had full documentation of to help support that reasonable salary, and we're only paying self-employment tax on that reasonable salary amount, but we're avoiding it on the distributions piece. So we did that analysis to help them there. The next thing we did was created the perfect mix of reasonable salary. This keeps the IRS happy, as we talked about. The perfect mix of reasonable salary, distributions. Distributions are great because we don't pay self-employment taxes on distributions. And then we also talked to them about taking full advantage of tax strategies, maximizing deductions. These are things that are reducing our profit completely that are going to be meaning that we're paying less in taxes. So this was the type of analysis that we did with them. We talked about what is their current situation. We asked them some key questions to understand what should we do. We talked about the retirement. They wanted to fund retirement. So we built out a retirement plan that's going to provide them with a super tax efficient way to grow their retirement and grow their long-term growth while also minimizing taxes in the meantime. And then we optimize that payday. How are we paying them and how are we optimizing it based on their entity structure, based on their situation? So to kind of wrap all this up, everyone's situation when it comes to this analyst is unique and different. And you should not follow general advice that you just hear online when it comes to your business. Now, you can take a framework like we did today and apply it to any income level. Whether you're making $100,000 a year or $1 million a year, you can take this same type of framework and apply it to your level, but you need to adjust it and tweak bits and pieces of information for your situation. This framework, this idea, this question, this analyst, this entity setup, this split between salary and distributions and how we do that is all a general framework, which is really good. But now we need to tweak it for you. The tax strategies that we recommended to this specific client might be different than what we recommend to the next client. It's not necessarily the same. We need to look at your situation and understand what is the best plan moving forward for you. Now, the most important thing when it comes to this entire analysis and looking at this picture of how do I create the most tax efficient setup is to build a solid tax plan that works with you and your situation as something that you can easily understand and implement. And that is exactly why we built TaxHelp, to help you along this journey, along this process. So now that you've seen the best payday routine for optimizing your tax plan, I want you to understand that this is truly just the tip of the iceberg when it comes to tax plan as a whole. There's so much more that goes into creating an optimal tax plan for your given situation. And through analyzing thousands of tax plans, I've found that what truly matters most is the advice you listen to when you go to create your tax plan. And with how easy it is to fall in what I call the generalized content trap, where you never get advice specific to your exact situation, I want to offer you a complimentary demo of TaxHelp where we'll analyze your exact situation and help you come up with the best tax plan possible. Just click the link in the description to book that complimentary free tax helm demo now, and I'll see you on the next video.